This is the first time that banks are, revealing the risk disclosures. Firstly, how significant is it, and what kind of risks are we looking at?
Thanks, Haslinda. Thanks for inviting CDP to speak about a very important issue. So this is the first time we're getting this kind of an outstanding or enormous figure of about $100 billion of climate risk, almost $100 billion. And 87% of that, as you mentioned, comes from 84 billion, comes from 4 banks that are reporting their data. Banks have reported data in the past about their climate risk, but this is the first time we're getting this kind of a huge figure and talking about climate risk. Most of it comes from their investments in climate threatening areas like agriculture, steel, cement, some of the what is known as the hard to abate sectors in climate jargon. These are the old industries that have been using a lot of fossil fuels and a lot of resource material that needs urgent looking into and action to address those climate change issues.
We were talking about how they arrive at these numbers and the process involved there, and how much bigger the cost could be for not addressing, first of all, climate change issues and other things going wrong.
Thanks, Rish. So it's essentially like, for instance, the largest risk that I mentioned comes from the State Bank of India that says that the agriculture financing and agribusiness portfolio is at a risk of that. What they do is they adopt what they call, and this I'm quoting directly from their response, an integrated approach to risk assessment. So and these are not, they don't share the details of that. How do they do the risk assessment? HDFC, which mentions a risk of nearly 180,000 crores, which has done a scenario analysis study on 5 flood-affected states in the country and their business presence in that area. How does that impact, and so on? And the bank's credits exposure to agriculture and allied sectors, as well as as I mentioned, what we call is the hard to abate sectors: steel, cement, coal, petroleum, and power sectors. So the different banks use different climate risk assessment tools, and this is what it is. Some of them even see how their own infrastructure exists in these cities or regions that are flood prone or drought prone, and how impact does it have. And this is essentially the bank's exposure comes from their lending portfolio.
Damandeep, give us a sense and perhaps put in perspective in terms of the damage and the hurt it could cause the agriculture sector, because this is a sector that employs about half of India's population.
Yeah, absolutely. Thanks, Haslinda. So, the larger economy-wide analysis, and those have been done by the World Bank. And, a couple of years ago, they came up with a report where it says that 2.8% of India's GDP could be impacted by climate change by 2050 if no remedial actions are taken. And this they're talking about only from about the central 10 main districts in central India. So, and that impacts, half of India's population if the risks become that big, 2.8%. This includes physical risks.
To follow up on that.
Yeah, go on.
To follow up on that, if you take a look at the broader Indian economy, it is so dependent on so dependent on coal, and that's expected to be the major source of energy for decades to come. How is that being factored in?
So, so I mean, what we find is that a lot of the companies that are responding to CDP are actually trying to see if they can move away from coal and trying to find alternatives. I mean, we find that a lot of interest in gas and so on, but the existing companies, they're having a lot of difficulty in moving away from coal, the ones that have been using for a long time. Specifically, I'm talking about a few of the steel companies. And so this will take a while on how do they transition onto some of the cleaner fuels. And India's just launched a major project on green hydrogen to explore how they can use that. That shows promising signs. We are directly in touch with the biggest steel manufacturers in the country, and they are willing, and we've had several rounds of discussion, they're willing to commit to net zero by 2050. The problem that they're facing is lack of technology in the near term. So we have a program called Science-Based Targets, where we encourage companies to take and align themselves to being net zero by 2050. 51 of the top Indian companies have signed up for that, which is the highest in all the emerging economies. But also what we find is, say, for instance, yeah?
Yeah, I just want to move along very quickly. We haven't got much time. I just want to talk about water. This keeps on coming up. Of course, it's a huge issue there. We've got the Indus Water Treaty, which perhaps needs a reforming at the moment. But tell us about water risks and how they play in this.
So the water risk is a major risk, and we find that companies fewer companies respond on water. We are a self-disclosing platform. So last year, 28 companies responded. But of those 28 companies, they are reporting 13 of them have again monetized their financial risk. And that is of the order of those 13 companies are talking about nearly $3 billion worth of risk, 20,500 crore odd. The interesting bit is that the cost of response would be only 0.5 billion if they were to address that risk. So the cost of inaction is actually 25 times if they don't act. That is the issue. The companies need to act and work on that. Water is a far greater and graver and immediate risk to companies.